Hi there, I'm Sandra Lastovic. I'm the principal broker with the Mortgage Centre. And if you are buying your first house, you probably figured out that getting a mortgage is more than just about your income. Lenders look at what we call the five C's of credit: your credit history, your capital, the down payment, your capacity, your debt ratios, your character, which is job stability. And the one we're talking about today is collateral, which is the fifth C of credit. Collateral is actually the property you're buying because a lot of first-time home buyers don't realize that when they buy a house, the bank isn't just lending you the money, they're lending against the home that you're buying. And they want to know that the property is actually worth what you've paid for it. So here's a special guest we have, Chris Bison. He's a CEO of Value Connect. It's an appraisal management company and a software tech company that coordinates property appraisals across Canada. So he sees every single day what makes a first-time buyer deal go smoothly and some of the trip ups that first-time home buyers have when it comes to appraisals. Chris, welcome to our podcast.
Thanks, Sandra. Happy to be here.
For everyone who's never bought a home, what actually is an appraisal and why does the lender need one?
Well, it's essentially an appraiser will provide an independent estimate of the value of the property. And the lenders want this because they want to protect their interest in the mortgage that they're providing to you. So it's completely unbiased. The appraiser has to be untied to the transaction in every way. So they can't have any interest. They can't have a family member buying or selling the property. So it's completely third party arm's length. And one of the additional benefits for the home buyer is that they're also giving the home buyer an estimate of the value. So they know if they're potentially paying too much or if they're getting a good deal or if they're right there with where the market is dictating prices should be.
And so this brings up an important point, and one of the biggest traps that we see on our end is in a competitive market. And it's interesting because right now we're seeing in our marketplace sometimes competitive bids on a property. And sometimes we always recommend a financing condition, but sometimes I feel like the buyers get pressured into putting together an offer without any conditions. So what's the risk that's related to that, especially as it relates to an appraisal, if there is no conditions or waived conditions?
Yeah, if you're foregoing your right to put a financing condition in your offer to purchase, you're essentially betting that the appraised value is going to come in at or above the price that you've agreed on. And so the challenge is if it doesn't come in, you're funding that gap or potentially losing your deposit.
Yeah, so tell me about this appraisal gap, because this is at the heart of what we see a lot of offers. So, what happens if a buyer agrees to pay 600,000 for a house, but an appraisal comes in at 575,000?
Well, that $25,000 difference, that's the borrower's responsibility to come up with it in addition to their down payment. And so if you were putting 10% down in the first place on 600,000, that would be 60,000, right? And we're simplifying things because we're not talking about closing costs or anything else. But
Yes.
if you're putting 10% down and the appraised value came in at 575, not the 600, you're going to put 10% of the 575 plus 25,000. So you could see it's quite a bit more. And so that's what can happen if you don't put in a financing condition and you get an appraisal done and it comes in below what you thought was a market price.
Yeah, and we always recommend that if an appraisal is required, because sometimes lenders don't require appraisals, but I find in the cases that we deal with, about 90% of the time, an appraisal is required. And we want to get that as a part of the condition of financing because if we don't get that sorted out and we do that outside of the condition of financing, um,
Yeah,
the house,
it could come in lower and then your customer's scrambling.
right, exactly. Just to change gears a little bit, uh, not only does like the value drive an appraisal, the condition of the property also can affect the value for an appraisal. So it's not just the market that affects the value. What about the house itself?
Yeah, absolutely. So there's a few things that affect value, right? The size of the lot, the size of the house, the neighborhood, these things all impact value. But then, of course, the condition. And that's one of the main reasons why a lender wants an appraiser to go through the house because they can see the stain on the ceiling from water leak. They can see a hole in the wall, deferred maintenance. They can see all the problems with the house. And so that kind of information goes into the appraisal report. They're the eyes and the ears and the nose of the lender when they go through a home. And that's the kind of information that shows up in the report in addition to the value. But these different conditions, when the appraiser is creating the appraisal report, they will make adjustments inside the appraisal report for the condition of the subject property. And so absolutely, the condition does form a huge part of the overall value. Yeah.
One of the things that we see in where through our office is a lot of lenders won't lend based on property that might have a knob and tube. So you may knob and tube electrical wiring. So you may have this gorgeous property. It's old. It's got that old world charm, but it has this type of knob and tube wiring. And we can incorporate some of those renovations actually into the mortgage through
Mhm.
something called the purchase plus improvement mortgage. And we'll cover that under another podcast, but I just wanted to point that out to our listeners. We also specialize in rural properties, and these are sometimes a little bit more trickier to appraise and more trickier to finance. Are there certain properties, why is this true? Why is it harder to praise a rural property or possibly a property that has acreage?
Well, part of it comes down to what the lender allows um, in, in in how the appraiser builds the report. So lenders have something called the terms of reference or appraisal guidelines that they give to appraisers. So for example, some lenders will accept up to 100 acres of value. Some lenders, it might be 10. Some might be only 5 acres of the total can go into the overall value of the property. So right there alone, right, you could see absolutely the 100 acres, you would get more value out of that than 5 acres.
Right.
So there's that. The other reason or a reason why it could be harder for an appraiser to appraise for one lender versus another, or because it's rural, is there's just fewer properties to compare
Okay.
against.
Yes.
And so sometimes what they have to do is they either have to look further back in time or further out in terms of distance. And so they may go back 2 years to find a home that's similar to the one that they're appraising right now because there just haven't been that many in that area that have sold in the last 6 or 12 months. And sometimes they have to go 10, 20 kilometers away to find a property that sold that's similar to the one that they're
Okay.
appraising. So it's just harder to appraise rural properties because there are fewer transactions, there's less data for them to work with.
Right. And we often say like because of the sort of the nuances for rural properties or properties with acreage, we often recommend a longer financing condition just because of we need to sort that out, not only with the appraiser, but the lender.
Oh yeah, that's a great point.
Yeah.
There might be 50 appraisal companies or 100 appraisal companies in the GTA. But then
Okay.
the minute like you do mortgages in all of Ontario, right?
Yes.
So
Yes.
the minute you start getting towards Sudbury or north of Barrie, and those rural areas, it's not abnormal for it to take up to 2 weeks to get an appraisal in some of
Right.
those spots, just because there are no appraisers and they have to line it up with a day of the week where they might go 400 kilometers or 1,000 kilometers in a
Yeah.
day to do a route, right, where they pick off a bunch of these properties that are hours away from Timmins, let's say.
Okay.
Yeah.
So what's your best advice for first-time home buyers that want to avoid these appraisal surprises?
Well, I think the most important thing is just have a financing condition
Oh, yes, I
and and
agree.
and be aware of your market. Know what's happening because some markets can be could be a buyer's market, it could be a balanced market, it could be a seller's market, like it is right now in Thunder Bay and all the communities where the economies are driven by natural resources.
Okay.
They're all doing great. Everything around the GTA, Guelph, out to London, Windsor, because of the automotive industry being up in the air,
Hmm.
they're all on shaky ground, or I don't want to say shaky ground, actually. I should just say they're more either balanced or buyers markets.
Right. Yes,
And
that's what we're seeing.
yeah, and then within that, in some bigger markets like the GTA, you want to know right down to the property type in the neighborhood what's happening because townhomes in the 416 can be doing better than townhomes in the 905. And
Right. So it,
condos in Oshawa are doing worse than condos in Toronto. So it's good to really know your market. And then on top of that, understand what's happening with the type of home you're looking to buy. And that's where obviously you come in because you have
yeah.
access to reports, but keep that financing condition in.
Yeah, that's great. So I think the big takeaway for today is that collateral matters because a bank is lending against the house, not just to the people who are borrowing. And the appraised value is what the lenders are working with. So if you're thinking about buying your first home and you want to get the financing sorted out before you start writing that offer, please let just reach out to us. That's what we're here for. If you got any questions about your own particular situation, as I said, reach out. The links are below. Thanks so much for joining us, Chris.
You're welcome. Thank you, Sandra. Bye for now.
Bye.